Hey, I hope everybody's doing well. Happy New Year. It's the 14th of January, 2023. Sorry I've been MIA with my weekly updates. Had some positive news, a 16-year kind of waiting game. My wife and I finally welcomed little Liam Brian Aurelius into the fold. So the last couple weeks, well, actually since the end of November there was yeah, very, very positive, but hit the ground running fire drills. And yeah, everything else got put on the back burner to welcome little Nugget. So yeah, he was born 12/12, 2022. Again, just a beautiful, beautiful experience. This whole journey for my wife and I. I mean, we should write a book on it, just to kind of document so many of the cool little synchronicities that kind of happened through it. But yeah, so he's a 1 month old as of the 12th. So yeah, 2 days ago. And let's get into kind of the sessions with Sharky. Let's get back to it, right? So as with anything, PMA, I think I mentioned in the past some visualization stuff. Liam was the primary focus for a lot of my visualization work. The whole 3:33 in the morning thing, waking up early, becoming the man that he would deserve, the father that he would deserve. So yeah, this is just another page in that chapter for me. But it's cool to see, yeah, cool to see that chapter, the old chapter's ending and this new one started, and my heart gonna be fuller. So, Liam, when you see this later on, love you, buddy. I know you know that. So yeah, straight into the PMA, beginning of the year, the whole new year, new me thing. I try to treat every day like Groundhog Day. I suggest you do the same. When people do things based on calendars, it's like, let's make our goal a goal list or whatever, our 10.0 version of ourselves. Let's just do that list and execute every single day. At the end of the day, let's make a note of things that we regret, we could do better at, and then tomorrow, the following day, let's not repeat the same mistakes. Again, I just use the movie Groundhog Day kind of as a half of a joke, just to keep it lighthearted, but let's just keep it just just rinse it out day in day out. Here's a cool thing from Akira the Dawn, Jordan Peterson. So for a lot of people, think for me personally, not living up to my potential, being too quote unquote humble, or thinking being meek and humble is the way to go. The issue with that is if the good people out there are meek and humble and just get run over by, as Jordan Peterson in another video calls the tarantulas. Nietzsche has a little thing on the tarantulas. Check that out. Um, Man, paints a perfect picture. So we need good people who are dangerous, but have the character and self-control to contain it. So starting off the year, I just encourage everybody to step up. If you are humble and like me, where you're like a little bit too timid, um, show your teeth a little bit more, but be good, good-hearted about it. Yeah, definitely the middle way. One of the things I'm doing just for myself, a lot of EMF, electrosmog, from a health and wellness standpoint. This is kind of going to be one of my little, probably this quarter, next 3 to 4 months, I'm going to just be doing more diving into it. This had an interesting, with frequency and vibration. We have Wi-Fi routers, we have our cell phones in our pockets, Bluetooth headset, radiation in my brain right here, separated by the tiniest, tiniest thing. Dr. Andrew Huberman has a thing coming up on EMF and Bluetooth, so I checked out his AMA. I support some of his research, so there was a video I was watching yesterday for some of the people that support him outside of his regular YouTube, and I'm looking forward to see what the data that he has, and my gut feel on it is should be doing wired, and but again, I'm not going to make any rash decisions or anything like that, but I'll do my own research, look at the data, make an informed decision, and do again, I already kind of know I'm going to need to do some course correcting there, but there's some things that we can do. And again, this video here, this little chapter harmonizing electromagnetic fields, understanding that we are electromagnetic, bodies essentially, positive, and our feet are the negative. We have Wi-Fi routers and all that stuff, so it affects our cells, right? Our cells are little energy mitochondria and all that fun stuff. So anyway, this is just going to be something personally that I'm doing from a PMA, but more of a health and wellness standpoint. So I just wanted to share that with you. Dr. Robert Gilbert, very interesting fellow, to say the least. He has his website here, vesica.org, and funny enough, I was just checking it out. They have a 2023 resource guide. Lots of very interesting information. If you've never heard any of this, go slow. I've been on his personal development journey since 2006 in earnest. Kind of dabbled a little bit before that. Always had an open mind. What's the quote that I think I got it from Terence McKenna, where it's I entertain ideas, I don't necessarily give belief over. So with anything, trust but verify, right? Don't be a foolhardy follower where you're just like a lemming going off the cliff, but don't necessarily be a super skeptic. Again, the middle way is typically the way that's going to benefit us the most in the end. But that said, we have voltage cellular healing that's going to affect your body, and then off healthy air and surfaces. So I have a molecule thing here in my room, actually right here. I got clipped with some sort of head cold the other day. Even though I do not participate in sickness, still got sick, so I'm recovering from it now. Excuse me. But anyway, here's a fantastic resource from a health and wellness. So mind, body, soul. Like I said, me personally, I'm going to be digging more into the EMF. This quarter. Shout out to Jocko. Not sponsored, but fantastic. I drink the watermelon one if you're curious, and I'm very picky about all that. All right, so let's get into the charts. So PMA tastes great. So yeah, since last we talked, a couple weeks ago, before my wife and I had our family edition, which again, so freaking stoked. 16 years, what of patience and discipline. Again, we're gonna have to put a book out, and it's gonna be like a Netflix movie special or something. It's gonna be crazy. But as you can see here, my little heart, I marked it off for this volume profile notch. We definitely have uppy in the markets. I'm not sure if this was, just a reset from the FTX. I mean, from a level standpoint, it is. All we've done is just reset the loss that we took there. Without that, could that be some market manipulation where they needed some FUD, rip prices lower, smart money get the fill? Who knows? Like I try to, tell my students that I work with from over at TRI, and then also, with myself, I just, try to take all the opinions, take all that just with a grain of salt, build my trade plan, use my setups, and when the charts say, hey, if this is something I'm interested in, when I have, 3 unrelated raisins, sometimes, well, not sometimes, I do use more than 3 now, but at least 3 unrelated reasons, then, my plan tells me to act, so I got to act, and this is kind of the result of what happens. Not all the time, but, I'm going to, even let's say if I'm 2 to 1 risk to reward, break even's 33, 34%. So things like this are more than 2 to 1. My win rate's going to be more than 34%. So, in the end, I'm going to take some losses, take some on the chin, but I'm also going to have some winners, and, all in all, going to be net positive, assuming I could follow my plan and I stay disciplined, right? So yeah, we've enjoyed a nice rally kind of across the board, and make your own determination on who, what, where, when, and why, all that is, but I don't necessarily care for any of that. I'm just going to trade the charts, and so we had some hash ribbons, which is a quant signal. Talked about that previously on previous sessions with Sharky, right? Have some support here. We had this crypto Twitter tier level. I mean, came through clutch, right? So that's what, 15, 16, 17 grand ish. This head and shoulders, I was actually looking for broken heart around 13, lucky number 13. I totally still could see us rinse up here, break everybody's hearts, and I'll say it wouldn't be completely unlike crypto to do that. I think we did that. Let's see here. Around here, we had a little pump here, consolidate, I think that was down to, it was originally 6K to 3K. This set up a heck of a weekly W there, and then also an 886 tag. Again, heck of a level if you're there. So I'm not predicting markets. Who knows? Could go all-time highs from here, could go sideways, could go down. Up, down, or sideways. That's what's going to happen. I'm just going to define those risk windows. But from a level standpoint, this is what we're looking at, running to some brick walls here. Definitely have this cluster up around 25K. If we could bust through some of these less significant resistance levels, definitely going to bump our head at 25K. Again, big fat round number, makes sense, and looks like that we're doing that here at 20K as well. But like I said, 13K, and then just mega support down here, 13 to about, what's that, 10K, right? So, crypto likes to break everybody's hearts. If it gets everybody on the long side, uber bullish, then, run these stops, cascades of stop runs, some FUD with, FTX, blah, blah, blah. Mr. Gensler coming out for the Yale and Harvard boys and all that fun shit. But yeah, so from a short term, here's what I'm looking at. I was actually working with a student the other day, and we were talking trend continuation setups. His primary setup that he trades is a ranging market state setup. So this would be a ranging where, top of the range, bottom of the range, take your shots down here, take short shots here. But if we come in and consolidate, i.e. the middle of the range, that this would be the trend continuation type setup that I'd be looking for. And this would be, an A to B, C to D. And just to be on the record for it, I'll go ahead and drop this in. Let me put my magnet on here. Boom. Assuming this is as far as we get up. Let's go. Yeah, drop it in. That's just for fun. Yeah, about that. So that again, yeah, 24, 25, right? So some confluence with those levels. I'll mark that level off as well. Again, just to be on record as far as what makes sense, what would be reasonable to expect. But as of right now on the daily, still got some steam. I'm not calling tops here. Definitely don't chase, hunt your setups, trade your setups, and yeah, don't chase, because if you do, then it's just a great way to be an unprofitable trader. So yeah. Another model that we've looked at here, it's one of our moving average studies that we teach in the TRI Level 2 program, Nico Baker's phase analysis. As you can see here, it's flashing uptrend. We have his domino, definitely, getting to, 10. That's as high as it gets, so it's bullish as all hell. Again, we could expect some cooling off, recharge, and if this is a bull in earnest, pull off, recharge a little bit, consolidate, and like I said, that trend continuation. One thing I will point out here, I was just doing some fun little pi cycle high and low, little metrics, using the blow off top here from the high with that extra little punt. This is where the signal marked off as low, using the same kind of delay, which funny enough for the low puts us at the 7th of February. So what's that, 3 weeks? I just thought that was interesting. Again, this is some of that, not esoteric, but just crystal ball, trying to predict the future stuff. Actually has no weight and no merit in my trade setups. It's just something fun to look at, so to speak. But from a setup standpoint, I do use location, support and resistance, looking left, 786 to 886 Fibonacci retracements of this overall range all the way back from 2018. So we definitely have location. For me personally, I like to use MACD and then a Williams percentage R plus some volume. I had my 3 reasons, so I've been accumulating and building long positions. So yeah, volatility steady. I think we talked about this, multiple W here in RSI. Didn't really get the breakout that we were thinking back, in the fall / winter. Just took a little bit of time to percolate. We had the tax loss selling, things like that. So in the end of the year, it's like you're trying to sprint in mud. It's never really going to work out in our interest. So we just got to be patient, and it feels like, at a minimum, the rubber band was stretched too far down. And this might just be a correction back, to the mean. One more, elevator rip, break everybody's hearts lower into that 1310K to really set the quote-unquote, legitimate base going into the LTC happening in August, and then future forward down the road, Bitcoin happening, which will be kind of the next major fundamental driver that everybody's kind of in the back of the mind, right? Mining cash flow, we'll talk about that real quick. Again, just these cost of production values for any commodities, fantastic. If you don't like cost of production, fair play. 200 MA, 400 MA, those are also good to take a look at, just as a very keep you honest, bigger picture cycle standpoint. When we start getting down into things like cost of production, I mean, as you can see historically, it is significant support. Sometimes we will, break below it, but if you're going to if you're going to be hunting asymmetric risk windows, when you get down there, excuse me, it's just, I mean, come on. Should you be super bearish down here? If you're going to be bearish, it would, way, 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 way up top. This is not an area to be extremely bearish. It just doesn't make any sense. You're trying to squeeze blood out of a rock, and again, just the statistics and the probabilities just aren't in your favor long term. So, it's like pissing into the wind. Why are you going to do it? Anyway, my 2 cents. It's not worth much. But one thing I thought was, it's, again, not hindsight, because I've been looking at this chart for some time. I did not, my crystal ball, tea leaf bullshit did not work here. I expected a, one more pop, FU kind of through that, didn't get that. But my ultimate target as far as where we're can expect to get some support, again, we're talking 400 simple moving average on the weekly. That's this yellow line here. Again, 13,880 if we look left as well. So this is a confluence of location reasons. We're below some cost of production values, which we know, it's just not sustainable. Once we start getting below cost of production and below value, things like that, from a long-term perspective, investing, it just stacks the likelihood, the probabilities in our favor. And if we are traders and we're risk takers in the market and we have trade plans in that, it's probably a decent time to start considering taking a shot. So yeah, so that's a little bit of PMA, a little bit of Bitcoin. Altcoins are rallying. Won't go too much into that because I've already kind of droned on here. A little heavy with the PMA stuff. But yeah, if you don't know what a trade plan is, you're struggling out there, I encourage you. There's a guy that I found on YouTube while I was doing a 6-hour drive up north to a customer. 3.5 hours in, I found this Coinigy Fibonacci retracement tutorial. The guy's name's Brian Beamish. He runs a school online. It's called therationalinvestor.com. I personally went through the program. I've been actually since I finished level 2 TA, then I swapped over to be the level 1 TA, been doing that for a hot minute. And now Murat and I are actually going to be the level 2 instructors together. We're going to co-teach it. I'll do 6. It's 12-week modules. I'm going to do 6. He's going to do 6, which is super rad. Murat's very, very intelligent young man, to say the least. Heavy on the maths, which is amazing. So this Fibonacci retracement tutorial, if you don't know what you're doing, check this out. I'll drop this on the show notes. And this right here, kind of this breadcrumb, set things in motion for me. And, I can't say enough about it. And 10 out of 10 would recommend. Not shilling anything. I just giving myself, my future self to past self. This is something that I would strongly recommend to myself to do. Back in 2016 when I was kind of thinking about it, kicking the tires. So I'm glad I did. That was 2017 when I actually finally pulled the trigger on that. And just taking it a day at a time. And you guys have any questions, feel free to drop in the comments. If you're on the site, TRI in the lounge or any of the school rooms, feel free to reach out to me with any specific questions. And I hope you guys have a beautiful week. All the best. Cheers.